Good day, everyone. We are now back to recording the element of costing unit from your level 2 foundation certificate in accounting qualification from AAT. This module is normally taught at the beginning of the course or just after both of the bookkeeping modules, since it is going to be a standalone unit, which is going to be involved in your management accounting part, comparing to the other two will be financial accounting. And this exams tend to be kind of challenging for students in certain ways, but it is going to be one of the easiest exams overall when you comparing to the overall attainment. From the AAT website, you'll find this exam is going to be having one of those highest outputs for your level 2. And then also this is going to be more involved with calculation, so you will have much use for your calculators, and you have to remember how to the formulas in this scenario. So let's get into that exam first quickly. So you have the first screen here at the moment. It says you have 1.5 hours to do this exam as 10 tasks. So these tasks are generally going to be same category for all 10 of them. You may get different questions while you're in the exam, but also remember, this is all being tested thoroughly with different types of management accounting costing questions here. So let me just see whether I can get the screen full and zoom out a little bit, and so I can see that start button, and then I'll zoom back up in a minute. So let me start the exam by clicking the start assessment screen on the screen. So here, the first question we have seen now. So let me just zoom in a little bit so it'll be a little bit more clearer. You will see this video in 1080 high definition. So if you have lower settings, make sure you turn that to higher settings so you can see the questions much more clearly. The settings can be found on whichever software you use to watch this video. You may use a YouTube application or you use a web browser. Make sure you use the settings to change your the video output to 1080p. So that means you get the highest quality possible. The first question is for 10 marks, and then you also see the end of task right here. So you just have to make sure scroll all the way down to ensure you see this particular thing so you can move on to the next one. You can, by clicking this icon also, you can move on to any particular questions you like, but since I zoomed in, you're not seeing that one now. So here you will see an option to flag your questions, and then you can move back and forward, depends on where are you. Okay, so let me just zoom in again. Let's start with the first question. It's asking you identify 2 examples of direct cost of a manufacturing business from the list below by dragging them into an answer box, into the answer box. So here, direct cost. What is the direct cost for you? Direct costs are something you can attribute direct to the item or the product they're manufacturing in the business. So rent, on one hand, it is going to be an indirect cost, as you still have to pay the rent regardless of whether you produce goods or manufacture goods there or not. So the rent is going to be an indirect cost. And if you look at the telephone cost, it's also going to be same. Electricity for the administration office, administration wages, they're all going to be indirect. The reason they don't go, you cannot identify the cost in line with what you're producing. But on the other hand, the production wages and the raw materials are both in line with your production, of your goods. Therefore, your production increases, your wages in your production department increases as well. If your production increases, the cost of raw materials is also going to be increasing as you go, with an increasing amount. So they will be a direct relation to your product. So therefore, these are the 2 answers. And then for manufacturing business, raw materials are an example of what? Variable cost, semi-variable cost, or fixed cost. So again, have a look at it. The same thing I told about the direct cost. When it comes to a raw material, the cost you use in the production increases with your level of production increases. So if, for example, one item will cost you on 10 pounds in raw materials, will that cost you for 2? What will cost you for 2? Will be 10 pounds multiplied by 2, it's 20. So it increases with the level of production. So therefore, it's a classic example of a variable cost. There, you have to be very careful with it. People sometimes do confuse the total cost to the unit cost. Unit cost for one variable cost unit is always a constant because you know how much material I'm going to use for one item. That is going to be a constant figure. We don't call that as a fixed cost. Fixed cost is the overall cost. For example, the rent here, the rent doesn't change with your level of production. So that is a classic example of fixed cost. We're not talking about rent per unit. We are talking about rent as an overall cost. So therefore, anything like administration, wages, electricity for the admin office, telephone costs, these will be all classed as a fixed cost because they don't have direct correlation to your production. You may say sometimes, oh, I may use more electricity, but they're talking about electricity per admin office. So when it comes to electricity for the warehouse, there might be slightly different calculation, but trying to keep it simple. Don't overcomplicate by asking a question where you think, oh, I'm going to combine this and this. No, you're at the moment level 2. When you're level 2 students, they don't expect you to make those kind of a critical decisions when it comes to management accounting. So you have to just simply think, okay, is that related to my product? If it's going to be related to my product, it's going to be mostly a chance going to be a direct cost. Most of the time, direct costs are variable cost as well. For manufacturing business, variable cost will be increase or decrease with a higher level of activity. So if you know your variable cost is going to be lower when your production is lower, it will get higher and higher and higher. That means it will increase with your level of activity. Why? Because more you produce, more cost is going to be for you. So that is the part they're trying to explain here. For a service business, the main purpose of financial accounting is to help management make decisions. Of course, the management normally going to look at it, a financial accounting to make decisions, are they? It's not. Normally, the main purpose of financial account is about what has been done already. Financial accounting is for past, not for future decisions. So if you want to make future decisions, yes, it's going to be management accounts, not the financial accounts. Okay, so therefore this answer is going to be false. The financial account include forecast for the future performances. That is also wrong because financial accounts are for past, aren't they? So let me just verify that quickly. Let me verify that with the AAT website anyway. So what they have said, let me see. Yeah, I'm just verifying that anyway, and the answers are both going to be false. Okay, so you have to be very careful. Sometimes if you think, oh, one of them is false, the other one must be true. No, it can be both false, it can be both true, or it can be one of them true or one of them false. Don't fall that classic trap. Complete the following sentence using the drop-down list. Financial accounting classifies cost by what? Is it going to by function, behavior, or nature? So if you remember your financial accounts, normally they will do by production first, then the selling and distribution, and this is going to be what we call by function. Normally, the financial accounting are classified by the function there. Okay, just let me have a quick look at it for you. Yes, it is by function. Let me just I'm trying to find the surpass again. Yeah, here you go. It's by function. So they by, you know, like whichever department they are, that's the function is all about. So now the next question here is about coding. So what is the coding is for? The coding is they have given you the activity and they've given you the nature of cost. So it's going to be either direct, indirect, either material, labor, or overhead. So they all going to be either classified in that cost or not. So wood used in production, it's going to be material, so A, and this is going to be direct cost. So they're going to be A100 for this one. If they have said the cleaning material used in production, you will say A200. Why? The cleaning material is going to be a material, but it is not directly used in the production. It's used with the cleaning. So they cannot identify how much cleaning product per item when you're producing. So they're saying here, wages for the office staff. So the wages for the office staff is going to be a labor, and it's possibly going to be an indirect labor, because therefore it's going to be B200 will be your answer. Because if that person works in the production, it will be B 100. So if that labor is going to be a direct, it will be B 100. But if the staff working in the office, they're going to be labor still, but they're going to be indirect labor. And identify whether the following statement is true or false by using the drop down list. So an organization's coding system must include both letters and numbers. So whenever they use this kind of particular words, must, always, only, I always tell the students, oh, that means you must, there is no other options, which is wrong, because normally coding system can be either numbers or letters or combination of both of them. So this answer is going to be also false. Okay, so there is no set rules. You must use both. You can just use numbers, you can just use letters, or you may use something special. It doesn't matter. So for you guys, it is important to remember these particular words always, always, always. I'm using that word again, always, because they can be as your deterrent. That means the answer is mostly going to be incorrect. So let's move on to question number 2 now. Identify the following statement are true or false. So they're saying here, FIFO using the most recent values of purchase to value closing inventory. LIFO assumes the oldest items of inventory are issued first. AFCO issues based on the most recent purchase prices. Now I can do something very tricky, or you may say, educated guess, because AFCO means it's average. So it cannot be most recent. It cannot be the most, the old purchase. So this is incorrect because AFCO uses the average. So therefore this is false. But the other two, I need to find out whether I'm going to be using the right method or not. For that one, I'm going to just bring you up a screen where I can explain to you a little bit more clearly. All right. So let me just bring a spreadsheet up, Excel. A blank sheet. I'm going to bring it up in the screen for you. Let me just bring it up so it will be a little bit more clearer. There for a second, please. So here, my spreadsheet is on here now. I'm just going to show that to you a little bit more clearly. So now, FIFO. So imagine this is your receipt for E except after C. Receipt A, receipt B. So these are your receipt when it comes to issue. Okay, so now if I use FIFO method, receipt A will be issued first. And then followed by receipt B, but I'm not going to worry about receipt B now. We're only going to talk about it, okay? So let me do this way. It's a lot better if I do now this, okay? So I'll do this way. It's easier. So if I do FIFO, so the issue will be and the closing inventory. So if I'm going to look at it with FIFO, I will be issuing A. With AVCO, I'm going to be issuing B. In LIFO, I will be B, and AVCO is going to be AB because it's a combination of both. Here, A, B, A, and AB. So I'm simply using our knowledge of this to identify what is they mean by that. So they're saying here, FIFO uses the most recent values of purchase to value the closing inventory. So what they mean by that, on the closing inventory, you have B. Which one is the most recent purchase? A. This is the one we got it first, and this is the one you got second. So here, the closing inventory, the FIFO uses the most recent values of purchases. That means this as your closing inventory. So that is true, because for me, that answer is True. And then they're saying here, LIFO assumes the oldest item of the inventory are issued first. So they're saying here on the LIFO, we issue the oldest inventory. Oldest inventory, in fact, is going to be receipt A. It is not A issued using LIFO. On LIFO, we issue the newest inventory. So therefore, that answer is false. So let's go back to our the question. So you're going to be first true, the other two are going to be false. Okay, so let me go to Teams again, and let me share surpass viewer only. Okay, now move on to the next one. They're asking you next whether what sort of a method it is. Labor costs are calculated by multiplying a fixed rate by the hours worked. So therefore, if you get paid 10 pounds per hour, and if you work 30 hours, you get 10 multiplied by 30 hours worked, you get 300 pounds. This is called time rate. Okay, and the next one is labor costs are calculated by multiplying a fixed rate by volume of the item produced. So that means they say if you make one item, it'll cost you £1. It means we'll give you £1. So if you make 300 items, 300 volume multiplied by fixed rate of £1, this is going to be classic example of piece rate. So if you have time rate with bonus, means it's a combination of both. That means you get a guaranteed rate for your minimum hours you worked. And then, of course, if you exceed the production by a certain number, then your, like expected demand, then you will get a bonus. Therefore, that's going to be time rate plus bonus. And then also you have the fourth one is going to be the overtime rate. So you will get more hours you worked, you get additional overtime paid for you. So let's see this. Identify two ways which the information on budgeted cost is used by clicking on the left-hand box and matching to the appropriate right-hand boxes. Uses the budgeted cost to meet the regulatory requirements? No, budgeted costs are nothing to do with the regulatory requirements because their regulatory requirements are from the past calculations. They're not part of the budgets. For the shareholders, do you think shareholders care about the budgeted cost? No. To calculate the wages payable, why you want to use the budgeted cost? Because the wages payable is going to be already incurred. Therefore, that cost must be already paid or calculated, and it should be already available for that one. But the budgeted costs are something we can use to plan and control our future cost, and then also to predict the unit cost for my productions. Okay, so these are the two possible answers, because if you look at these three, these are not something they will be interested with your budgeted cost, but these two will be the most suitable answers here. Now let's look at the next one. Complete the following sentences using the drop-down list. The sales division of a business would be an example of what? Because a sales division, what they will make revenue to the business, therefore, there's a chance they will make a profit. So therefore, they will be called a profit center. A business division to be considered a profit center, it should or should not be responsible for the what do you call capital expenditure, because normally if it's a capital expenditure, it is normally done by an investment center, because the investment center invest the capital in the business so it can acquire more assets. So it should not be responsible for capital expenditure. In manufacturing business that is largely automated, most appropriate overhead absorption method is going to be by machine hour, because here you have these three options. Normally, if it's an automated, it's going to be mostly machines. If it's machines going to be taking over us, like in good old Terminator movies, we just let that be decided by machine hours. I'm just kidding there, guys. So it would be per machine hours. Okay. Now let's move on to the next question. Now they have said here, Argo Limited uses the weighted average cost method AFCO to value its issues for material to production. A receipt and issue are in the inventory record below for material RM6. So we have to calculate this particular inventory record sheet, and then we also have to do these two calculations. Okay, but when it comes to AVCO, the life is a bit easier. But I will show that to you how this is all calculated. For that one, I'm just going to bring a good old Excel sheet back up now. Let me just bring that this way. So I'm going to see whether I can bring the Excel spreadsheet. This one. There you go. Excel spreadsheet. So we'll delete this and then resize it a little bit so we'll be able to fit everything in this side now. Okay. All right. All right, now you'll be able to see the whole of that screen now. So what they're asking you here, they want you to calculate the amount. So what is this balance is going to be meaning? That means we already had 1,000 kilo here. We have another extra 1,000 kilos. That's 2,000 kilos. And the total cost is going to be this plus that is going to be 11700. Okay. So if you add both of those, that is the amount you're getting. Now, out of that 2,000 kilograms, we're going to be issuing 1,680 kilograms using the AVCO method. So what is the important part here is this level. This is the level. We have the value of the inventory before. So all three calculations will be considering this as my total kilograms and my total cost. Okay. So now, if it's going to be 11,700 pounds, my average cost per kilogram is going to be the 11,700 divided by this 2,000. It should give you £5.85. Okay, and then you're going to multiply that by the 1,680, £5.85, and that should give you the total value of your inventory of 9,828. But then that gives you 320 kilograms of your inventory left, and they also will be valued at this price because that is the average cost we determined beforehand. So here I'm going to find out what it is. Give me 1 second, please. It's going to be 320 multiplied by £5.85. It's going to give me 1872. But which way I'm going to make sure my calculations are right? Add this figure and this figure, and it should be giving you that amount there. Because once you have that much cost of goods, and if you issue this much, you should realistically have that is left there. Okay, so what now we have to do? We're going to follow the same method to calculate the other two inventory calculation methods. So they want you to do cost of issue and the closing inventory on a 31st of January. So let's do the FIFO method first. So FIFO. So now, if I'm using FIFO, I have to use first in, first out. I have to take whatever I can from the inventory I had begin with. So 1,000 kilograms being used, and the total value of that 1,000 kilogram is going to be 5,800. But now, do you need any more? Yes, you need 680 more. The only place I can take from this second issue here, this receipt now can fulfill 680 kilograms, and they will be cost at £5.90. So now I'm going to do here, I'm going to simply use a calculation that to find what was the cost I'm taking from the inventory received on 12th of January. So the final amount is going to be that plus that. That should give me 9,812 pounds. But then now my closing inventory going to be closing inventory. Do we have anything from that? No, because all of them has been exhausted. We have 320 from the issue we received on the following day. They were costing you £5.80, and now this is going to be this multiplied by this, and it should give me a value of 1,888. Okay, but now let's prove my calculation is correct. So to make sure they're both in the right length, we're going to add this and this to see whether we have this 11,700. See my 11,700 there. So my calculation is correct accordingly with our calculation methods. Now let's go to LIFO method. When we're doing LIFO method, the tables have turned because we cannot use this opening inventory of 1,000. We have to take our first stock from this 1,000 we received on 12th of January because that is the last in first out. So we're going to say here 5,900. And then we're going to take the 680 from where? The initial inventory, which were cost at £5.80. So here, the cost of that inventory going to be that multiplied by that is that equal to that plus that. And that should give me 9844. And then my closing inventory on this scenario, we have 0 of that, and we have 320 of £5.80. Okay, so that's going to be equal to that multiplied by that. Be give me 1856. 1856. Let's go back and check whether my previous assumption, my total inventory value, is it going to be equal to 11,700? Yes, 11,700 is as shown here. So that is going to be your acceptable answer. So therefore, you will be getting 6 marks for this calculation and 4 marks for this big calculation you have done below. Okay, now let's move on to the next one. Now, this question tends to be a bit tricky when it comes to it because people have found it, not understanding what it is they're meaning. But again, what you need to do, you have to simplify that to make sure you understand what they're talking about. Okay, so here, all production workers in the factory paid a basic rate of £8, so that is their basic rate. Night shift workers are also paid an unsociable hours premium of £25 basic pay. So here, I'm going to show here, basic rate is £8, okay. Night shift premium is going to be that multiplied by 25%. So it's going to be £2 extra premium and night shift OTP. Okay, so it's the night shift overtime premium is going to be 20% of that basic rate. So here multiply by 20%. So it's £1.60 you get premium for that. All right. So here they're saying here the total hours worked in this scenario is £1,200. Here they're simply asking for premiums, isn't it? Therefore, the overtime hours are all inclusive in there. So the basic pay will be 1,200 multiplied by 8 is going to be £9,600. And overtime, so what do you call nighttime unsociable hours premium? So the hours they have done is 1,200, and the premium is going to be £2 per hour. So 2 multiplied by that is going to be 2,400 there. And the overtime premium is £1.60 multiplied by 200. It's going to give you £320. Okay, so the total before the bonus payment is going to be 0 to 3 12 12,320 pounds. So we have managed to calculate up to that far, but now we have to look at the next step. Next step is how to calculate the bonus. So here they have said here the factory sets a target of output each month. £50 per worker bonus is paid for each completed percent that actually output exceeds its target. Okay. So the last month target was 35,000 units. They have made 38,500 units. So the excess they have made is going to be 38,500 minus 35,000. Let me put a formula there. Okay, so this is the excess. The target was 35,000. So what is the percentage they have exceeded by? Easier way to do is equal to this, divide by that, and we change that to a percentage. So here, if you go on there, change to a percentage is 10%. Okay, so how many workers they have there? They have 6 production workers, and 6 multiplied by 50 is 300 pounds. And the bonus is going to be 300 multiplied by 10%. Means you see here, every 1% they have 300 pounds. So it's going to be 3,000 pounds bonus. So let me see quickly. Let me bring the SharePoint for you. Yeah, so the amount is going to be 15,320 pounds, because remember how the bonus was calculated? Per worker is going to be 50 pounds per each complete percentage. So if they have done 10% more, per worker get 500 pounds bonus. And if they have 6 workers, 6 multiplied by 500, that's going to give you 15,200 pounds. So the maximum you can get in this question is 8. Therefore, you will only get met. You won't get an exceeded because it's less than 10 marks. Now let's look at the next one. Question number 1.5. Marlboro Limited is considering how to cost its product. It needs to decide on overhead absorption basis. We'll use the method considering our machine hours and the labor hour. So how to calculate the OAR? OAR is always going to be overhead divide by the activity level. So therefore, if you have your total overhead of 450,000 pounds, you're going to divide that by 30,000, and the overhead absorption rate, they want you to calculate to 2 decimals. So this is going to be 15 pounds per machine hours. And for the labor hour, I probably have to use my calculator here. 45,000 divided by 56 to 50, and that is going to give me 8 pounds per labor hour. So these two OARs will be applied when we're going to calculate the total unit cost here. Okay, so let's see that how this is going to be transpiring. So 5 kilograms multiplied by £3.20 per kilo. So this is going to be equal to 16 pounds material, and make sure we leave everything in 2 decimals. Okay, so here it's 16 pounds. And then this answer also going to be 16 pounds. Regardless of what method you calculate, your material cost is not going to change. How about the labor cost? Labor cost is 15 minutes at £15.40 per hour. So therefore, my total labor cost in this scenario going to be 1540 divided by 4. It's £3.85. So £3.85 labor, £3.85 per labor. But now, when it comes to the crunch time, how to calculate the overheads? Remember, this rate they calculated here, it is not this rate. Why? This one is the absorption rate for your overheads. This is the labor rate, what you pay your employees, how much per hour. So therefore, if it takes 15 minutes of labor with our labor calculation method, 1 hour is 8 pounds, means for 15 minutes, it's going to be divide by 60 multiplied by 15, or simply divide by 4. The labor overhead absorption is going to be 2 pounds. Okay. And for machine hours, it's for 1 hour, it's going to be 15 pounds. So for 10 minutes, you have to divide this by 60, multiply by 10. That should give me £2.50 overhead absorption rate. See that here, this is for 1 machine hours. If it takes only 10 minutes, you can just divide this by 6. You find £2.50 per item. So therefore, this item is going to be costing that much. Add all of those together, 13, 10, 22. All right, okay, wait. £22.35. Here, this will be £21.85. That's all you need to do. You don't have to make a choice of which cost I'm going to be using when I'm going to price in the unit. It depends on what the manager is going to be deciding on that. Okay. So this question, you have 10 marks. Let's move on to the next one, 1.6. Here, they have given you 3 different types of cost. So how would I know which is going to be fixed, variable, and semi-variable? So for me, I should know plant maintenance is 50,000 per year, whatever the activity level, plus £2 per unit. So this is a fixed cost here, and this is £2 variable cost we adding on every time we produce a unit. So therefore, this is a classic example of semi-variable cost. Why? Because you have a fixed element and a variable element. Direct materials, £3.50 per unit produced. That means every time I produce one item, it keeps on increasing. 2 items going to be £7, 3 items going to be £10.50, 4 items going to be 14. It's going to be a variable cost. But the depreciation of factory building for £60,000, will that matter what items and how many items and what is the maintenance? No. The depreciation of the factory building, £60,000, is an expense we have to bear, and that one will be going as a fixed cost added to your calculations. So now they are asking you, complete the table to show the cost for production output level for 2000, 4000, and 6000. And this one, you haven't seen it before. But what should give you, by looking at this, you will say, oh, you know what? I know my both constants I need to use to calculate. Why? Because here on the first part, they're giving you the total variable cost of £3,000 for 2000 units. So you know, for 1 unit, the variable cost per that unit is going to be 3,000 divided by 2,000 is going to be £1.50. That £1.50 per unit, it doesn't change. So that means that £1.50 per units can be used in these 3 levels as well. If the variable costs for 2,000 units is going to be 3,000, 4,000 units is going to be almost automatically, it's going to be a double of that, isn't it? And this is going to be a triple of that. Why? It's going to be costing every one of that units £1.50 variable cost per unit. So if you multiply 4,000 by £1.50, you get 6,000. 9,000 unit by £1.50, you get 9,000, so on, so on, so. Fixed cost, on the other hand, will that change with any level of production? No. That is the example of a fixed cost. Fixed cost is whichever level we have, we don't change that cost. Look at that here. 7 marks you're going to get from this, just identifying the variable cost. It changes with the level of production. And then, of course, the fixed cost will not change with any level of production. So add all of those together, £18,000, £21,000, and £24,000. And that will be the answer for this question. Now, 1.7. So now what we have, the company has the following cost information for its last accounting period. So here we have a direct cost and indirect cost of your materials, labor, manufacturing expenses, and then some reconciliation of your work in progress and your finished goods. So when it comes to your manufacturing accounts, very important, guys, follow the steps. The steps is starting with prime cost. What does your prime cost means? Prime cost is your direct costs. Direct material and your direct labor is going to be called as a prime cost. Here, your direct material cost is 20,000, direct labor cost is 40,000. These are the only thing will be involved in when you're going to calculate your prime cost. So your prime cost is going to be 20 plus 40 is going to be £60,000. And what is your manufacturing overheads? So here you have manufacturing expenses. Is that the only one you're going to be considering? No. Why? Because these indirect expenses on your material and your labor, they also classed as your manufacturing overheads because they are not part of your prime cost. So the only other place it can go, it will be under your manufacturing overhead. So if you're going to add all of them together, it's going to be £100,000. Your total manufacturing cost is going to be £160,000. Okay. But now we have to find the cost of goods manufactured. So what we need to do next is going to be reconciling this work in progress. The trick here is always remember you add your opening inventory, take away the closing inventory. Okay, adding your total inventory give you 8,000 pounds. Take away the closing inventory is going to be minus 12,000 pounds. So the net change is minus 4,000. So I have 156,000 pounds here. And then again, you also have the finishing goods. So the opening finishing goods are 0. So you don't have nothing to add. The closing inventory, you're going to take away 26,000. So if you take 26,000 just alone from that, so it's going to be giving you 130,000 as my cost of goods sold. This will be going in when I'm going to be calculating my profit and loss, which you don't learn until next year. So don't worry. Next one here, this is a calculation question. It's similar to what you have seen before in question number 1.2 or 1.3, I think. Let's see. Yeah, it's on 1.3. So we're going to do 1.8 similarly, but with a twist. Because if you look at that here, the first part, it charges you 3 marks, but then you also have some extra to do down here. Okay, so that is 5 marks for that one. Okay. So let's do this. It's 15,000 here with the same way we have calculated before. Okay, so 20,000 plus that is 67500. So now when we're going to issue 8,000 unit using AVCO method, so according to AVCO now, the cost per kilogram, end cost per kilogram should be completed in pounds to 3 decimal places. So how I'm going to find it? So I have 67500 divide by 15,000, and that gives me £4.50. But they're asking you 3 decimals, so let's do one more extra decimal there. You need to follow what they're telling you, so you need to make sure, even if it's a 0, add that decimal to make sure you got that amount. So here we have £4.50. And then you're going to multiply by 8,000, and that should give me the final issue price of 36,000. And then it leaves you with 7,000 kilograms. The amount is going to be 7,000 multiplied by £4.50. So that's give me 31,500. So you add this figure to that figure, and you should get 67,500 there easily. Okay, so this cost here, 36,000, this is where we're going to be applying, because this is for, according to this, we use that in 50,000 unit. Okay. The direct material cost for production 5,000 unit is your total cost figure in part A. So on part A, this is what I have found. So now, what we need to do, calculate what figures would have been if the production has been only 40,000 units. So we know per unit, I'll be able to calculate this figure by 36,000. This is the total material cost. Divide by 50,000. It tells me 72 pence per unit I'm going to be spending on materials. So this divided by number of units. Always remember, when it comes to cost calculations, the cost needs to be the one above your, I think it's going to be your numerator, and the denominator is going to be the one number of units. So that means you'll be able to find the cost per unit. So 72 pence per cost per unit multiplied by 40,000, and that gives you 28,800 here. And similar I'm going to do for this cost, 42,000 divide by 50, that gives me 84 pence, multiply by 40,000, that's going to give me 336,000. Now hold on, 33,600. 33,600. The next one is the manufacturing overheads. And do you know what is this? This is a fixed cost. If it's a fixed cost, what's happening to the fixed cost? Fixed cost will not change with the level of production changing. So the fixed cost remaining same. But now we're going to calculate the total cost. The total cost is going to be 1 there and 132,000, and this one is going to be 288. 288 plus 336 plus 540. So it's going to be 11640. Yeah. So they're asking you here, calculate the total cost and the cost per unit for PD6. So here, what is the total cost? We have done that. So this one divide by 40,000 units. £2.91 per unit here, and here 132 divided by 5. So it's going to be £2.64. So what do you notice now? If you produce more, your unit cost is going to be lower. When you make less, your unit cost increases. Classic example, because of this manufacturing overheads only getting absorbed by lesser units, therefore the cost increases. More and more unit you produce, this getting absorbed by more and more units, the cost per unit now comes down. Now let's look at 1.9. Here you have a variance question. The variance question is like a profit center of a manufacturing furniture manufacturer experience a favorable variance on both sales and wages. The variances on sales are 10% of the budgeted figure. The variance on wages are 5% of the budgeted figure. So if you want the 10% of it, you just multiply by 10%. That should give you 2,925. The 5% of that is going to be of your wages. 1,155, 1155. But now they ask you to calculate your actual income and your actual expense achieved. So when it comes to variances, if that is favorable, when it comes to sales, the actual income has to be higher, isn't it? Because means you budgeted for £1,000 income, and if you earn 1,100, it is good for you. So therefore, it's a favorable. So here, because if it's favorable, we're just going to be adding that figure to this figure. 2,250 plus 2,925 is going to be giving me 32,175. So that means it makes sense to me because I have achieved more income than I budgeted for. So my variance is going to be a favorable one, but it's going to be turntable for the other part. Other part is when it comes to expenses, you need to be spending less than your budgeted for to achieve a favorable outcome. So therefore, this has to be taken away from this 23,100 minus 5% equal to 21,945 pounds. This is also a favorable variance. Why? We spend less than I budgeted. Therefore, this is going to be classed as a favorable variance. So now let's look at the next one. Calculate the variance for selling and distribution overheads. Identify whether the variance is adverse or favorable by using the drop-down list below. Do not use a minus sign. So therefore, you need to put the highest figure, take away the lowest figure. So here, 43,300, sorry, 43,300 minus 39,500. It gives me 3,800 there. But is it good or bad for me? Is it good for the business or bad for the business? How are we going to identify that? If it's an expense, if you spend less than your budget is 43,000 something, your actual expense is 39,000 something. That means you spend less than what you expected. Therefore, it's going to be a favorable variance. And then they're asking you here some more questions. Identify whether the following statements are true or false. A company that has an adverse variance on fixed overhead has spent less than in that area than budgeted. That's wrong. When you have adverse variance, you must have spent more than your budgeted figure, because otherwise the cost is going to be lower. If that cost is lower, that is not adverse, it's favorable. Therefore, this statement is incorrect. Favorable variances always increase profits. What do you think it is? If it's a favorable variance, that is definitely going to increase your profit, isn't it? Because your profit is always depending on the variance is going to be favorable. So let me see. Yeah, it is always increasing your profit. So that is definitely a right answer, because if you spend less or you earn more than you expected, of course, you have more in your profit column because your expenses are lower, your income is higher. So definitely it is going to be a favorable variance. That means it's going to be increasing your profit. Now let's move on to the last question. We still have plenty of time, guys. Identify whether the following statement is true or false. Adverse variances on sales are always considered to be significant. The word always, see that here? Always means it's wrong, because they are simply saying even if you have £1 adverse variance, it's going to be a significant. It's not true, because you're not going to be spending any resources finding a small variance when even if it's by a pound, you're not going to be bothered that much about it. So the answer is going to be for this. When they say always, that means it's not right. If they say adverse variance on sales can be considered to be significant, of course you can think about it. Yes, it's an option. But when they say always, it's not right. Okay, now let's look at the next one. We have been asked to complete the performance report for the month. The budgeted and the actual figures have already been summarized in the table below. Company policy is that a significant variance must be in excess of 10% and greater than £500. So there are two conditions. It needs to be more than 10% and also greater than £500. A significant variance should be reported to the relevant manager for review and appropriate action. So therefore, we need to say whether it's going to be significant or not, and after that, whether we have to report it to the right manager or not. Okay, so let's have a look at this. The first one, sales. The variance is going to be budgeted and the actual. So therefore, the sales is going to be a lot bigger than what you budgeted for. 29,250 you budgeted. And your actual sales is going to be what? 42,175. So your variance is going to be £12,925. What is the percentage in that case? 12,925 divide by 29,250. So 12,925 divide by 29,250 multiply by 100. So it is going to give me, the percentage is going to be 2 decimals, 44.19, because it says 18888, 880, so it's going to be 19, and we're definitely going to call it significant. Why? Because it's more than £500 and it's also more than 10% of the budget. But let's look at the next one. The variances in this scenario is going to be only £300, because that minus that is going to be 300. The percentage of that is going to be 300 divide by the budget 23,100 multiply by 100. It's going to be 1.30, because it's 298, so it's going to be 1.30, and it doesn't meet either one of those categories, or not both even. So there's definitely a non-significant. So next question they're asking you here. You have been asked to provide the information on the company performance for the month. Variance in excess of 5% of the budget and are greater than £500 are significant, should be reported to the department manager. Adverse variance in excess of 20% of the budget and that are greater than £2,000 are significant also, but that should go to the department director. So now we have a scenario here. We need to decide whether we're going to investigate this. So the budget, it is 248,000. The actual is 224,300. So let's find out what is the variance. 248,000 minus 224,300. So they're asking you, what is the variance in sales? So 23,700 pounds. So therefore, definitely there's a big variance than 502,000 pounds. But we don't know whether is it going to be adverse or favorable, or whether it's going to be more than 20% or 5%. Let's find out. Calculate the sales variance percentage to 2 decimal. Okay, so we're going to do 23,700 divide by 248,000 pounds and multiply by 100. Right. Calculator decide to do something different. Okay, divide by 248,000 pounds, multiply by 100, and that gives me 9.56%. Identify whether the variance is favorable or adverse, because if you look at that here, this is your budget. The actual sales are lower than your budget, therefore it's an adverse variance because you earn less than what you're budgeted for. But they're asking you whether it is going to be a significant variance or non-significant variance. So it's definitely a significant variance, because if you look at that here, the condition is 5% of the budget, yes, is more than that, and greater than 500, yes, is more than 500 there. But is that exceeding the 20% going to be an adverse variance? It is adverse, but it is not more than 20%, but it's definitely more than 2,000. So here the condition is 20% of the budget and greater than 2,000. So this condition is not met. Therefore, you don't have to go to the director, you go to the department manager. So here it needs to be going to department manager as your answer. Okay, so that's it, guys. We managed to get that done within an hour here. But what is the thing I keep saying that to whenever you're doing any of your exams? The important part is take your time, read the questions carefully, and then don't forget to flag and move on. If you get stuck anywhere, very important, you don't waste any time on a question you're stuck, because normally you will be able to get easier questions later part of the exam. You may miss out on them if you're not doing your time management properly. Many students I have noticed they fail because they ran out of time. So just manage your time appropriately, guys. And then of course, and this is one of those exams you just breeze through quickly. I'm hoping, and this is going to be significantly increasing your prospect of the overall results going to be increased. And then you're moving on to the new syllabus next year doing AQ 2022. So by the way, I will be trying to record the mock assessment 2 as well, if I have time later this week. If it's not, and I will wish you all the best, and then I'll speak to you again in my next video. All the best. Take care. Bye-bye. Oh, let me see whether it says I'm competent. Yes, let's finish that on the high there. Okay. You may close. Yeah, take care, guys. Bye-bye.